Welcome to the Transparent FX Academy. I'm Nick and I'm a top podder on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about USDCAD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which has just created a very strong impulse to the upside, followed by this correction. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have a perfect 50% retracement, which is currently lining up exactly with this previous monthly supply and resistance area from which all this previous move to the downside was created, that now that the market is testing from above is currently acting as support and demand, because as you know, previous resistance after it is broken to the upside becomes support. So this level is actually confluence of support because we have both the 50% retracement and this previous structure level currently lining up in the same zone. And in fact, we can see that every time that the market tested the area, it rejected it to the upside quite aggressively. So in a situation like this, more bullish price action could be expected away from this zone. Dropping down on the weekly time frame, what do we see? Now, from a weekly perspective, we can notice how this level has been acting quite precisely as support. Every time the market tested it, it rejected to the upside. In a situation like this, where we just had the test a few weeks ago, we could expect more bullish price action away from the area, considering that we also had this double bottom created at this zone. Going down on the daily time frame, what do we see? Now, from a daily perspective, before we identify the structure, first of all, I did speak about USDCAD a few days ago when the market had created this M pattern. From here, I explained all the reasons for which we could expect this rejection to the upside, which the market has now provided. And by the way, I will link in the description that previous analysis, so you can go and check it out for more free education. Now, before we continue with our technical breakdown here of the structure that we have from a daily perspective, let's first go and see what we have when it comes to the commitment of traders, so the COT data, which is what institutions and the biggest players in the market are doing. Now, checking the data precisely for the CAD, what we can notice is that in the long run, net positions have been decreased quite a lot on the CAD. We went from minus 11k net positions with 48k shorts compared to 36k longs, all the way down to having minus 42k net positions with now 71k shorts compared to only 28k longs. So institutions have been adding shorts and closing longs respectively, therefore moving their positioning to the bearish side of the CAD. Now, a bearish CAD makes USDCAD stronger because keep in mind that if you're checking the data for the CAD, you're actually checking CAD USD because all currencies on the spot are traded against the USD. Therefore, since we are looking at USDCAD, we simply have to reverse this, because a weakening CAD means a strengthening USDCAD. So at the moment, institutions are positioning to the bullish side of USDCAD, expecting more bullish continuation. Now, if we move back here to the technicals and we identify the structure, we can see how this area was acting as previous daily resistance here, turned support here, again resistance here, and now that the market has broken it to the upside, is turned support at this level. Now, what we could expect here is a potential test of this previous resistance turn support, and then a potential move higher. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have a market which it has confluence of support at this area given by the 0.3 to 50% and 0.618 Fibonacci retracements lining up with this previous structure level that we have just identified, creating confluence of support in this zone that we could expect this market to potentially test and then to reject to the upside. So if we will actually have a retracement inside of this zone, how we could be approaching a potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. The link is also in the description. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge upfront discount on the price of the mentorship program from $497 all the way down to only $97. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the mentorship program, you open an account with them directly from your student dashboard and essentially move your trading there, you can get a full refund credited back into your trading account. And if you scroll lower here, you will see that there is still time to join before the offer expires and price goes essentially back to normal. And directly here, you can join to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. And I will see you in my next breakdown.